bad idea, because what's likely going to happen is they're going to get out of longs and they're going to start getting into shorts, which is going to fuel a move higher. And guess what? That's where the banks want to offload their long positions some more. How's it going, fellow traders? Magic Trader here, and this is your CFTC report for the data that was recorded on August 29, 2023. Welcome back, welcome back. We're going to delve into the positions held by the largest institutions in the world, and we're going to take a look at what they are doing currently with their positions with respect to some of the major markets. So let's start by taking a look at gold. All right, ladies and gents, here we have it. Here's the supply and demand of gold, and here are the positions held by the largest banking institutions. And what we can see is over the last few weeks, they increased their shorts quite dramatically, 85,000, 111,000, 124,000. And then recently they took some of those short positions and closed them off. All right. Meanwhile, they have been reducing their long exposure from highs of 263,000 down to the 226,000 area. Okay. Now, if we look at what's been taking place here, price has now rallied upwards, right towards this area of supply that we had mapped out on our charts. And so there's very good chance that once this area comes into play, price will decline like this. And if you take a look at the weekly chart, there's nothing to stop price until this area down here, the 1810s. Now, could something else happen? Could it stop midway through and reverse? Sure, it could. But from a supply and demand perspective, there's nothing to stop price from dropping further down here. But we'll continue to watch this because this supply is a weak supply. It's not a strong supply. So, you know, if we don't see momentum shifting to the downside from up in this area, then this could end up breaking and price continue higher. Okay. But when we look at the positions held by the institutions, we can see that recently they were adding shorts, and then recently, the last week, I should say, they started to reduce their shorts. So it was looking good for a move lower from that supply because we would want to see shorts increasing. But then for them to reduce them from 124 to 112 makes me start to think and question what is really their agenda here. One thing I can point out is if you look at the coloration here, you can see that they're starting to turn red. So that's that bearishness, mostly from the increase in shorts that we just spoke about. Okay, so right now I'm on the sidelines. I'm not trading gold because there's just nothing strong. There's no clear indications of what price is going to do. I mean, we have certain biases, but they're not strong enough for me to take a trade in either direction. Okay. When you look at retail traders, they're about 76% as of today. 76% long, that is. And so that's a little bit worrisome because we're up here and we've already started to decline from this area and they're adding longs. If they continue to add longs, I'd suspect that there's a good chance that we'll see a push up, maybe into the meat of this supply, and then maybe an eventual drop. Okay, so we'll have to sit back and watch and see how this plays out. So let's take a look at oil. We see that oil has been very strong lately. Okay, it contacted a demand area, and now we are seeing the strength coming in off of that demand area. Bottom line is they got very cooled off with their short positions since mid-July. Very cooled off with their short positions. And, you know, longs overall have been cooled off, okay, for quite some time. They got a little bit more aggressive at the beginning of August, but at this point, they're not really aggressive with their positions at all, okay? Shorts were at one point, if you take a look back here, you can see from, you know, May-ish area to mid-July. They got a little bit aggressive, but now neither shorts nor longs are aggressive. So to pick a clear direction for oil would be very difficult at this point. So we'll move along. We'll take a look at the US dollar. US dollar recently, last couple of weeks, they've gotten a little bit aggressive with shorts. And this is interesting as price is rallying. So price is rallying, and you can see the area that I have colored here with a darker red. That means they're getting aggressive. Also, we can see right here the coloration of the cells starting to turn red. Okay, that's a bearish signal, and this is as price is rallying. So quite interesting to see price rallying. They're increasing shorts. Now, is this in preparation for a drop to come? Like I said, this is something that we've been pointing out for several weeks now, is that, that with them increasing their short positions, it opens up the possibility that price is going to reverse. You know, what we do know is that the euro, we've been watching as the banks have been offloading their long positions. All right. And so when we get to the euro, we'll take a look at the positions held by retail traders, and we'll break that down into what that means in the short term. But keep in mind that the Dixie and the euro move opposite of each other. All right. All right. So let's take a look at Aussie. So we mentioned that Aussie hit 135,820, which was an all-time maximum size for shorts. And so they've since closed off those shorts, some of those shorts, reducing them down to 131,000. And we saw this price action here, okay? Price pausing at the lows. Recently, we see longs starting to get a little bit more aggressive, okay? Used to be very cooled off, very cooled off. So this is a change to becoming a little bit more aggressive with longs, okay? We are still inside demand right here, all right? But price is holding somewhat, considering that there's been a lot of positions being added on shorts. So we're going to watch this one closely and see as things play out. One thing I can tell you is that if you take a look at the position held by retail traders, they're about 81% long, okay? This is kind of signaling to me that we're going to see a reversal here, okay? That we're going to see a move to the upside. Now, how long is this move going to be sustained? I don't think it's going to be anything long, but it's going to be enough because, you know, when we typically see retail traders reach, you know, 81% long, that means they've been adding and adding and adding as price has been dropping. So they'll typically start to exit those positions, and that's when the banks will start to reverse price, okay? So wouldn't be surprised if we see a temporary move to the upside, right? Just like with the dollar, temporary move to the downside, just like with the euro, temporary move to the upside. And we'll get to that one very shortly. USCAD, look, okay? Long positions have been increasing. They used to be cooled off since August 15. Oops. Since August 15, they've been becoming a little bit more aggressive. But at the same time, shorts have been somewhat aggressive. Okay, if we look at the coloration of the cells, what do we see here? Okay, neutral, blue. So that means we really shouldn't be trading it. And I think that is great advice, because when you take a look at the dynamic on the chart, it's not ideal for trading, right? Look, we just rallied up. We're pausing. You know, we're expecting, we're seeing good odds that there might be a drop in the dollar. So there could be a temporary drop here on the US CAD as well. But there's no supply that we're contacting here. So to want to take a trade short, you know, it's a high risk trade. And I wouldn't want to put my money on something like that, right? Interesting thing is, look at the US CAD. They're 83% short right now. Retail traders are 83% short. So they're reaching near maximum shorts as price has been rallying. So what does that tell you? It's a good setup for a potential for price to actually start dropping. US Swiss, we take a look at this one and we see both longs and shorts are cooled off, and they have been cooled off for a very long time. Price has been creating this stair-stepping motion, right? And they're just about to hit supply. Interesting, because what did we say? Dollar pairs are set to drop from what we're seeing. We're seeing a lot of evidence to support that. And price is now coming up into this area of supply. So pretty good timing there, I'd say, right? Retail traders, what, 62% short right now? So they haven't maxed out their shorts. So it'll be interesting to see the timing on this one when it does eventually turn over, whether or not retail traders will be riding that short, or they'll be caught on the wrong side. So we'll see as things progress. And now we have the euro, and we see that after they reach 264, they've been profit taking on their long positions, which is precisely what we've been saying was going to happen. Okay. And so we got the quick move up off the trend line here, the weekly trend line that we had pointed out. And then quickly it started to come back down again, right? Now, here's the interesting thing. Retail traders are about 80% long, okay? And they're starting to offload those longs to get into shorts, because they were at around 85% earlier this week. And so they've already started removing some of their longs and they're switching them to shorts. Bad idea, because what's likely going to happen is they're going to get out of longs and they're going to start getting into shorts, which is going to fuel a move higher. And guess what? That's where the banks want to offload their long positions some more. Okay? So watch as price gets up here. When they start to realize that price is not dropping, they're going to start to take on long positions from the banks. And then likely see a drop like that. Okay? This is what I'm seeing. And so I'm just pointing it out to you guys so that you guys could be on the right side of these trades. Okay? Pound, US dollar, same thing. They've been profit taking on long positions. Okay? It's pretty much the same thing that's been taking place with the euro. 73% retail traders are long, and so they're not really maxed out like the euro, but pretty much the same thing is going to happen. If they push higher, then there's going to be eventual spillover, most likely, and then we'll see price continue to the downside. US dollar, Japanese yen, extremely strong. I've been saying let's watch this one because I think there's a very good chance that we're going to see higher prices. Banks are aggressive with their longs, okay? Shorts are cooled off. They're not even focusing on shorts, guys. Look at this. They're not focusing on shorts in the least. So this is telling you that they are focusing on longs, because you can clearly see, look at the coloration of the cells here, right? They've been aggressive. They took some profits on longs back in July, but they're starting to accumulate those longs back again. And we're starting to see that aggressiveness here on the charts. All right. Retail traders are 77% short. So they're, getting aggressive with shorts. So we might see a temporary drop, just like with the rest of the dollar pairs, temporary drop. But eventually, I believe we're going to see a reversal and then price head even higher. Okay. Last but not least, Kiwi, aggressive with shorts. We can see that in their positioning. But same thing that we've been talking about with the Aussie. In this case, with the retail traders, we can see 85% long, okay? That's very aggressive. So they're going to have to start to offload those longs, switch them for shorts, and guess what do you think price is going to do? Short-term rally. Very likely short-term rally. And then they'll flip it over and push it back down again, okay? That is what likely is going to take place. All right, ladies and gents, that's it. Hope you enjoyed this session. Hit the like and share the video if you can. Leave a comment down below. I'd love to hear your feedback. And that's pretty much it. Enjoy the rest of your day. Take care. So long.